This is Action and Ambition, the show that takes you all over the world to share interviews with the most successful and relevant people on the planet. Hear their backstory, get the most important lessons they've learned on their road to success, and hear exclusive tips on how to implement their success in your own life. Action and Ambition is brought to you by Entrepreneur Magazine and your host, Andrew Metal.
Welcome to the Action and Ambition podcast. I'm your host, Chase Geiser, and today we have with us Brian Pasfield. He has nearly 10 years of experience developing financial technologies as a software engineer. As CTO of Fringe Finance, he and his team seek to unlock the billions of dollars of dormant capital tied up in cryptocurrencies by offering loans guaranteed by them. The platform aims to accept the widest range of altcoins as collateral on the market to date. Brian, thank you so much for being with us today. How are you?
Hey, Chase, I'm really good. Great to talk to you, and thanks for having us on. Yes.
Absolutely. So I am a big fan of Michael Burry, and I'm interested to hear if you have any thoughts on him. Of course, he's the famous financial investor who predicted the 2008 crash, from the Big Short. I don't know if you ever saw that movie. And one of the things that he mentioned, and you may disagree with him, so this is why I wanted to bring it up, is in a tweet, because he's very cryptic about his tweets. He said something to the effect of just wait till everybody sees how leveraged cryptocurrencies are. And my question for you, just given the nature of the business that you're in, is What does the data show in terms of, there was a lot of people that were very excited, myself included, about investing in cryptocurrencies. I have friends who maxed out their credit cards and made hundreds of thousands of dollars on Ethereum, for example, years ago. How leveraged are investments in cryptocurrency?
That depends on the individual. It's quite broad. Some people are very conservative. Some people just buy and hodl, as they call it, which is just old unleveraged assets. And I think in this crazy world, that's kind of the way I go about things. But there are very conservative ways to approach this and achieve some leverage without going too crazy. One can achieve 100-to-1 ratios of leverage, but yes, one is playing with fire, and they really want to know what they're doing and be well protected in those circumstances.
Sure. I know that there's so much privacy associated with blockchain technology, so maybe the data is unavailable. I'm not sure, but I'd be very interested to see, what percentage of Bitcoin, for example, or some of these more popular coins are purchased on borrowed money. That's just something I'm curious about, because I'm thinking, all right, well, if we're using altcoins as a collateral, but if the altcoins are purchased on debt, then does that create a problem for the model? I don't know.
Well, it's very difficult to know if altcoin or certain coins are purchased on debt, because that debt may be in the traditional finance system, and it's difficult to correlate that unless it's on centralized exchanges, where it's quite clear, it can be quite clear if there's a correlation or at least a connection to some real world traditional finance debt. So, I don't think there's a simple answer on that one. Sure.
Well, there hardly is a simple answer to interesting questions, I suppose. Not to say my own question was interesting, but we'll see. I'm excited to see how it plays out. But I do want to rewind a little bit, and I just want to ask you where your story begins. Where'd you come up? Where'd you go to school, or did you go to school? And how did your career kind of start to get you to this point where you are in the crypto finance tech space?
Sure. Okay. So my background is engineering, and I do love the tech. But I spent a lot of time many years ago trading and in finance space, trading commodities and gold and so forth, and understanding a little bit about the financial world. And essentially, I came up with the conclusion that there's a club, and not everyone is in that club. And a polite way may be to say certain aspects of it are, what's a polite way? Maybe rigged is the right way to put it, but that could be a little emotive. And I think, to the point that you raised at the beginning of this, yes, there is lots of opportunity to leverage financial positions, and there is certainly a lot of that, and a lot of transfer of risk in those traditional finance spaces. And so I began to look at alternatives to that. And that's why I developed an interest in things like gold and silver, and having a look at macro trends. And despite what the the media may have been saying on a soundbite basis, on a daily basis in regular channels. I was looking at larger trends and such as energy and so forth, and just trying to get an understanding of how I could protect myself essentially against what was a system that ultimately wasn't tailored particularly for my success. So I was looking at those alternatives. And then in 2013 or 2013, a friend said to me, Brian, just go out and buy a few $1,000s worth of Bitcoin. And I kicked myself because it took me a year before I took his advice. But so I've been involved, and I was very interested in it, both from a technology sense and also just understanding to the degree that I did, financial systems and traditional financial systems. And this represented an entire new opportunity, a different paradigm, a different way of looking at things. And I think the world is slowly beginning to understand the opportunities here, you know, the opportunities for financial systems that that can operate in parallel and or completely separately to traditional financial systems.
Sure. And I think that banking is just one of those things that we all sort of take for granted. Not all of us, but most people take for granted as just like a necessary part of the financial system. But if you think about it, and I could be mistaken on this notion, but if you think about it, the original purpose of a bank was to hold either your paper money or gold and protect it in a vault so that no one could steal it, right? And you go and you make withdrawals or deposits and they keep track of your actual money, right? And then it sort of shifted to, we went off the gold standard, and all the currency, all the fiat, at least in the United States, of course, is not backed by gold, and they don't actually even keep any of it at the bank anymore. It's all sort of digital. And it makes one wonder, like, okay, why are we using banks at all then? Because they're not guarding the money from thieves, and the money isn't even really there physically, right, in a real way. And the reason I bring this up is because, like, we look at some of these things that are happening on a global scale with, sort of like the World Economic Forum and digital currencies. And we saw that, countries like Canada were able to shut down banking accounts and the ability to transact during some of these protests this last year. Obviously, Russians are facing all sorts of sanctions, right or wrong. There's banking issues that are a problem for them in terms of currency transfers and value transfers. And my question for you is, like, do you believe that cryptocurrency is a way to just totally avoid the centralization of money and basically make banking, in the traditional sense of the term banking, irrelevant?
In the purest sense, there is that possibility. I think it'll be a while before humanity progresses to that point. I think one of the points that you raised, why a bank still existing, well, it's all tied together with all of the institutions, taxation, government, insurance, et cetera, et cetera. So there is quite a lot of, let's say, intertwined institutions and mechanisms and payment processes that just make all of that easy, and people use it on a daily basis, and businesses and countries around the world use it on a daily basis. So to unwind that is a big deal, but sure. But cryptocurrency represents that opportunity to transfer value, which is not censorable. So ultimately, and again, to one of the points that you raised, this notion of property rights being violated by various governments and institutions around the world is something that is less easily done with cryptocurrencies, because it can't simply be switched off. It's non-custodial, or in a lot of instances, and people have their own assets. And so that is quite a game changer. And the way that will play out is a core part of, or that value transfer will be a core part of a transformation which will begin to incorporate legal systems that will sit extra territorially in the decentralized and pseudonymous world. But that, I think, is another discussion. But there's a bit of infrastructure and platform and capability that needs to be established for that to happen. But inexorably, humanity will probably move in that direction.
Interesting. So let's take it back to what you're working on specifically. Tell me a little bit about the business that you set up, how the tool works, and some of the differences between traditional lending and using this platform to do banking or business, rather, based on crypto assets as liability.
Yes, our platform is a lending and borrowing platform. There are a number of lending and borrowing platforms in the market. We differentiate ourselves, and I'll talk a little bit about that. But lending and borrowing in the crypto sphere is about lenders staking up their or posting up their assets to be lent out to borrowers. And our platform, as the term platform implies, is a platform. We do not act, or Fringe Finance does not act as an intermediary. This platform, through its smart contracts, holds those funds, and programmatically on the blockchain, it then issues loans to borrowers. The way borrowers borrow is they post up collateral assets and they over collateralize the loans positions that they're taking, because the price or the market price for their collateral positions does change. And this over collateralization, allows the protection of the lender's assets. And so I think that is a key point to consider, especially anyone listening here who's interested in converting their US dollar holdings to that are earning very little interest in a bank, converting that to a stable coin. And I can talk a little bit about stable coins and describe those, but convert that to a stable coin and lend them out on these platforms or on the Fringe Finance primary lending platform for much better yields. So that is the basic value proposition and the concept behind Fringe Finance.
That's very interesting, and it makes a lot of sense to me. And so I guess my question to you is, if I were to lend out my Bitcoin on one of these platforms, yours included, would the platform or the borrower owe me the US dollar value back, or just the number of Bitcoin back? So I think you kind of touched on this, but I just want to make sure it's abundantly clear. If I loan 100 Bitcoin, does the person owe me whatever 100 times the value of Bitcoin is in dollars, or does the person just owe me 100 Bitcoin back? If Bitcoin drops by 50%, do I basically just lose in that arrangement?
Well, it depends whether one denominates their assets in Bitcoin or in US dollars.
Right.
So if one denominates in Bitcoin, then either a rise or a fall in price of Bitcoin is irrelevant. It just is, well, perhaps not irrelevant, but it certainly is what it is. And the way it works is a lender will stake or deposit their US dollar pegged stable coins, and they will receive that back. They can withdraw that back at any point in time. The platform allows, all of this goes into a pool. So there may be a number of borrowers who borrow those lending assets that the lender places onto the platform. So it's not a one-on-one contract. It's merely, as a lender, I deposit onto the platform and I begin to earn interest, whatever the prevailing interest is at that point. And then whenever I wish, I can withdraw my assets, and I have my original assets back plus any interest I've earned at that point.
Wow. And it sort of begs the question, what's the point of using a bank at all? I mean, with that sort of arrangement, it does seem like a much more lucrative, financially sound thing too. And one thing that's very interesting to me about this is that before cryptocurrency, I didn't see a lot of peer-to-peer lending. I'm sure it's always existed, and different states have different laws in the United States, for example, but it's really sort of unique that this blockchain technology and these cryptocurrencies have allowed individuals to participate in lending in a way that really only banks were doing before.
Correct. It is permissionless financial services, and not only lending is available in the decentralized finance space, but a whole host of other financial services, insurance, futures, synthetics, options, a whole host of things there, and parametric insurance as well, which is all quite interesting. So there are quite a breadth of financial services available. And Fringe Finance in our roadmap will be progressively servicing a number of those markets, such as our first release product is variable rate interest. And so the demand and supply side, the borrowers versus the lenders on the platform, will dictate the interest rates. For example, if there is a lot of borrowing demand, and we anticipate with our platform, because we're targeting a particular market of crypto borrowers who otherwise can't easily deploy or obtain loans for their altcoin assets, we anticipate they will provide or be willing to pay a higher interest rate. And if we're oversubscribed, that means the interest rate will rise, which will attract more lenders to the platform. So this dynamic is built into the smart contracts and will allow the market to find the sweet spot that satisfies both the lenders and the borrowers.
Are the variable interest rates applied to existing loans or just to ongoing loans as they come in? So if I borrow money at a low interest rate, in 6 months, the interest rates really change. Does my interest rate on the loan that I still owe on change, or is it fixed?
It does change on the variable interest products. And the market is quite broad. So people will determine the marginal utility of taking out a loan. And if variable interest rates increase, well, then they may look to pay part of that back. And when variable rates reduce, they'll quite potentially look to increase their loan positions. So there are a number of factors that come into play, and it depends on individual circumstances. But of course, that from a lender's perspective also is an interesting dynamic because those variable interest rates will attract lenders more or less to the platform, depending on those prevailing rates.
Okay, that makes sense. And so let me ask you this from a borrower's standpoint. I guess it's from a lender standpoint too. They're sort of symbiotic, right, in this relationship. How do you vet the borrower to ensure confidence in the lender, to make the lend, right? So traditional banking system, we have credit scores, there's algorithms, there's asset analysis to determine whether or not a borrower is credible and likely to pay back. How does this new way of doing lending verify the credibility of the borrower?
It's quite simple. It is over collateralization of any loan position. So a borrower places up collateral, and it might be twice as much or 80% more or 50% more, depending on the volatility of the assets that they're posting up as collateral. And that is one of, or part of the mechanisms, the stability mechanisms that maintain the stability of the platform and protect the lenders. So the lenders don't lend to any individual borrower. It goes into a pool, they're lending assets, and then the smart contracts simply issue loans from that pool to over collateralized borrowers. And the platform knows that those borrowers are good for it because there is more assets there in collateral than the loan that they take out. So they will be compelled, or, a rational actor will repay that loan rather than lose their collateral.
Is the collateral always the form of cryptocurrency?
Yes. And so
so
these platforms,
Well, I was just going to ask them,
crypto.
why doesn't the borrower just sell their crypto then, so they don't have to be over collateralized in the borrowing environment?
That's an excellent question. Okay, so there's for borrowers, there are a number of personas that come into play, and they can be individual altcoin holders, or they can also be altcoin projects that have millions and millions of dollars worth of their altcoin as part of their treasury. So what they will want to do is, we have a number of partners who are very interested in posting up their altcoins as collateral so that they can take out stablecoin loans from lenders, take out stablecoin loans to operate and pay for in continued investment in their project, while they still maintain exposure to the upside of their token. So that is the key aspect here. People who own the tokens, the altcoin tokens, hold them for a reason, because they passionately believe in the value proposition of the particular project to which it's related, and they don't want to lose the exposure. So these platforms, our Fringe Finance platform, is a perfect opportunity to deploy those assets while they are waiting for the upside.
That's fascinating. And the other aspect of that too is, if you are an altcoin project and you need liquid financing to continue the project, you don't want to sell your altcoin in mass, because the slippage, right? The perceived market value, if there's a massive sell of the altcoin, could be actually harmful to the project, right? So if you put it up as collateral, then it doesn't actually show up on the market as a sale, right?
Correct. That is one of the key things that our partners are interested in, because it effectively locks up the tokens so that they're not on the open market, and therefore there is less supply of those tokens on the market, and therefore that is good for the project themselves, because it maintains the price and it minimizes the volatility, and also it is good for the altcoin token holders out in the community, because there is greater demand for those tokens, and for them it's even more worthwhile to continue to hold and seek the upside of those tokens.
Okay, so let me ask you this, and some of my questions may be stupid because this is all just brand new, and so I'm just trying to learn too, but I want to ask you whether or not there's a gaming of the system vulnerability. So let's just say, for example, I'm a bad actor in the situation, and I want to try to see if I can game the system. So I form a limited liability company, as they're called in the United States. I start an altcoin project, and I produce millions of these altcoins, which are worth perhaps fractions of a penny, right? Can I then put them up as collateral for a loan on your platform, and then just never pay the loan back, and sort of game the system by making the market look like my altcoin is worth however many fractions of a penny? I'll put up trillions of them as collateral, take the cash, and then just never come back. How do you protect against that?
Okay, so we have a number of mechanisms both built into the platform, and also our vetting process before we list a coin, a token on our platform as an accepted form of collateral. Some of those vetting processes include: who are the people? What's the project all about? How decentralized is it? Are individuals having control on the supply of the token? Does it have a fixed supply? And cryptographically, we understand and we can determine this just by looking at the blockchain and the token that they're using. And also, what have they done before? What's their roadmap? Are they delivering to it? So there are a number of sniff tests that really come into play there. And then additionally, we list tokens that will have at least some, because we need to get a solid price feed on these tokens. So it needs to have good representation in exchanges, either centralized exchanges or decentralized exchanges. But in aggregate, there are a number of factors there that go into determining really form our listing criteria, and it essentially sniffs out projects and ensures that when we do list something, it's gone through those various sniff tests, due diligence, and also our partners who haven't necessarily, or our willing partners who haven't necessarily achieved that scale as yet, well, we work with them and maintain dialogue so that we see how they're progressing. And that helps validate also that they're moving in the right direction and that they're good actors. So yes, any industry has bad actors, and there are various ways to sniff that out.
Absolutely. That was great response. Thank you for answering that question. I do want to make sure that we share where everybody can find you, follow you, find your brand, follow it, and how can people actually sign up for your platform?
Well, fringe.fi, so FRINGE.fi, as in short for finance, is the place to go. On the platform at the moment, you'll find our white paper that describes our offering. You'll find our links to our social media and our Medium articles and a whole host of information, and our Twitter, and basically more information than anyone really should know is all available there. We will be going live within several weeks on mainnet. We have completed our audits for our smart contracts, and we're finalizing the configuration and finalizing all the technical aspects to move that into mainnet. So we're quite excited about this, and this is a key time for us and the beginning of our delivery of the roadmap.
Well, congratulations on your launch, and thank you so much for coming on the Action and Ambition podcast. It was an honor and a pleasure to have you. I'm very excited for you and your business.
Hey, Chase, thanks very much. It was great to chat with you, and speak to you soon.
Bye-bye.
Thanks for listening to Action and Ambition with your host, Andrew Metal. Please leave a review and subscribe, and go to andrewmetal.com for all the exclusive lessons, behind-the-scenes footage, and video content of the show. Follow us on Facebook and YouTube at Action and Ambition, and we'll see you on the next episode.